What if you could use your money to become your own bank, earn a guaranteed rate of return on your money, and never experience losses, even if there's a recession? Sound too good to be true? In this video, we're going to go over what cash flow banking is, how you can use it to never experience financial losses, and how to set one up for yourself. I'm Jeff Winberg, founder of CommonwealthToday.com, where we teach next generation financial education to get your money working for you so you don't have to work for your money. If you're new to the channel, make sure to click the subscribe button and the little bell icon right next to it so you get notified whenever we upload new videos. So what the hell is cash flow banking? Now, to be honest, it's a fancy term that was probably just invented by someone in the financial industry to make this sound cool. But essentially what it is cash flow banking is using an overfunded whole life insurance policy to become your own bank. Now, I'm not going to get too technical in this video because I don't want to fry your brain. I'll just keep everything at a high level and keep it super simple so you can grasp the concept. Then you can check out more technical videos later on if this hit you like it should. The first time that I went through this, I had to rewatch the same video like 4 or 5 times just for it to finally sink in and for me to get like, oh man, this is huge. So we're gonna keep it simple so you can wrap your head around it, and then we'll make some more complicated videos later on. The whole life policy is essentially like a bank vault for your money. You hold your money in this account and it earns a guaranteed rate of return, and then you can take out money from this account to give yourself a loan, to invest in other things that are also going to generate a return, or to just pay for emergencies if you have something come up. When you take out money from this policy, the cool thing is the original vault stays there, still earning you a return on that original investment. So you've basically taken out a loan against this value. If you're investing the money that you took out from that policy, essentially you're getting your money working for you twice. Once with the original investment in the policy, and second with the money you took out to invest in something else. Now, talk about leverage. That's why this is so powerful. And that's essentially the banking aspect of it. You can loan yourself money against the value of the policy, then pay yourself back without having to pay interest. Now, hopefully this is exciting to you as it was to me the first time I heard it and grasped it. Again, if you need to watch this video multiple times, please do that. It's really a powerful tool, and it's one of the main reasons why wealthy individuals use a cash flow bank to basically store their money until they're ready to put it to use. It earns a return that's better than just keeping it as cash or in savings, and you have access to it when you need it, penalty-free. Now here's where it gets interesting when we talk about the returns that you can get on the money in your policy. You can earn up to a guaranteed rate or percentage with your policy value, and that's determined by the provider and when you get things set up. I believe historically over the last 100 years or something, it's like a 4 to 6% rate of return on average. Now, while this may not sound amazing, check this out. Because the policy isn't tied to the stock market like mutual funds or 401ks or tools like that, your policy will never lose value. It just might not grow. So if that's not really sounding cool or that great, let me kind of make an example so you can see the power of this. Financial experts are saying that we're due for a recession at any time. And what generally happens with money invested in 401ks or mutual funds is that the cash value of the accounts goes down when times are hard and the stock market goes down. It can even go below the amount that you've contributed to your account. So for example, let's say that you've invested $20,000 into your 401k and that $20,000 earned interest of $2,000. And I'm just making these numbers up. Now let's say the recession hits. It's totally possible for your account to not only lose the $2,000 that it's gained, but also to go below the $20,000 that you've invested in this account. Meaning not only did you lose all your gains, but you also lost some of your original investment. That kind of sucks. So now let's take a look at a worst case scenario with a cash flow bank setup. So let's say that you invest the same $20,000 in a cash flow bank and it's earned you the same $2,000. Now let's say the recession hits. Because 0% return is the lowest return you can get with your cash flow bank, guess what your worst case scenario is? $22,000. You just earned 0%. So this means you didn't earn anything, but more importantly, this is where the safety and the power is. You didn't lose anything. The policy didn't go down in value. It held its value. And that's why this is so powerful. You can get your money working for you, and it's a safe place to put your money that won't lose its value. If you have an emergency fund, or you've heard that you need to start one with 6 months worth of expenses, something along those lines, this can be a more leveraged approach to creating your emergency fund. Instead of just having that sitting there in your savings account or cash, or just like the savings account that earns like less than 1%, you could have it working for you to earn 4 to 6%, plus it's available to withdraw for emergencies or for other investments that might come up, while the original emergency fund money still earns you 4 to 6%. I've talked about setting up an automated savings system in other videos, and that just means that you're automatically saving a certain amount of money each month. So the money that's being automatically saved could be the money that funds this cash flow bank. Now, if you haven't got that set up and you need to figure out ways to increase your cash flow, make sure to download the cash flow calculator at commonwealthtoday.com/cashflow-calculator, and this will let you see how to increase your cash flow by rearranging things to pay off what's going to free up the most cash flow and get your money working for you faster. It's a really, really great tool. It's easy to use, and you can get it for free if you just visit that link. So overall, this is the basic overview of cash flow banking, how it works, what it is, and why it's so powerful. Now you might be wondering, how do you set this up? Well, use a qualified professional. And like I say that jokingly, but also in all seriousness, don't just, go down the street to your local life insurance salesman. Talk to a professional who has experience in setting up cash flow banks. You need to choose the right policy for your situation with the right amounts of coverage and all of that kind of stuff. You need to make sure you're following all the local laws and state laws and that kind of stuff. So just make sure you use somebody that has experience with this and can get you set up for success. When I set mine up, I used Sam Prentice over at thecapitalwarehouse.com. I'd recommend checking them out if you're looking to get started. In future videos, I'll go into the technical side of how all this works, but again, I didn't want to overwhelm you. This concept can take a little bit to just like wrap your head around, and if you haven't got it just yet, again, make sure to go back and rewatch the video until you do. If you like this video, make sure to give it a thumbs up, or if you didn't, give it a thumbs down. That lets us know what kind of stuff is resonating with you so we can create more of that and less of what you don't like. And also, again, make sure to click the bell icon next to the subscribe button to make sure you get notified when we upload new videos. And lastly, if you found value in this video, please make sure to share it with somebody else who might also find value in it, because we're really here to just spread the message of next generation financial education. We want you to be able to get your money working for you so you don't have to work for your money. You can use your money like wealthy people do and then go out and help other people do the same thing. So that's what we're trying to do, so make sure to share the video if you found value in it. And we'll see you in the next video. All right, take care.